Hi, I'm Monk and this is the Monk Way. Let's look at my current stock market watch list. This is every stock I'm interested in, and I own some of these companies right now. I'll go over why they're interesting and give a quick look at recent news surrounding the company. I'm not recommending any of these stocks as buys, only as stocks to watch. Subscribe and hit that bell for more stock market videos like this. I make them every day to keep you invested, and leave a like for the transparency. I'm going to be showing you some stocks I'm currently invested in. Make sure to check out Monk's Market Moves to see every single stock in my $300,000 portfolio, with instant email updates of every time I buy or sell a stock. Recent winners include Canopy Growth and Aurora Cannabis, up 25% for a total of $9,000 profit in under 2 weeks. Look for the link in the description for a 50% off coupon. This is still open, so get in before it's full price soon. First we have the S&P 500 Index, available in America with the symbol VOO, and VFV in Canada. This index is up 70% in the past 5 years along with some dividends, an obvious choice for any portfolio, and perfect to keep track of how the American market is doing as a whole. If this index is green, your other single stocks will likely be green too. This index contains 500 American companies including names like Amazon, Facebook, and Apple. They had a rough start in 2018. Looking at this chart, there was a 10% dip in January, then another big dip in March. It seems to have stabilized since then, but it was looking like a possible crash early this year. It seems like the bull market continues from here, but a crash can still happen at any time. Trade war tension between America and China is causing this instability at this point, a great passive income source for the conservative investor. The second index I care about is the Nasdaq 100 Index, available in America with the symbol QQQ, and XQQ in Canada, with 100 companies that are mostly technology related, with names like Microsoft, Google, Intel, and Nvidia, as well as the FANG stocks. The Nasdaq 100 went up 132% in the past 5 years, compared to 70% from the S&P 500. This means the more concentrated list of stocks had better returns. This also comes with more risk since 500 companies is more diversified than 100 technology-related companies. They had similar dips to the S&P 500 since they share many of the same technology companies. I like this index a lot since technology is not going anywhere soon, a little more risk but the payoff is worth it. Another great passive income source if you want a higher return at a little more risk. Then we have the single stocks I'm interested in. Two of the biggest marijuana companies in Canada, Aurora Cannabis and Canopy Growth Corp., available in America with the ticker symbol ACBFF for Aurora Cannabis, and CGC for Canopy Growth Corp., ACB and weed in Canada. I think both of these companies only has more room to grow, with possible 100% to 400% growth in the next 5 years. This is because legal marijuana is a $10 billion industry in Canada, and $100 billion in the rest of the world. Recently Canopy Growth received a $5 billion investment from a beer company. This doubled their stock price and market cap within a week, which also raised other weed companies on that hype. These are very high risk even early on because hype can die off and no one knows what legal marijuana will be like. I've had huge gains swing trading these companies and I will continue to do so. The only two Canadian stocks on my watch list. While Canada has some nice companies, I prefer the high growth of American companies most of the time. To the single American stocks, I have all 5 FANG stocks on my list. That's Facebook, Amazon, Apple, Netflix, and Google, all great stocks with huge gains over 300% or more in the past 5 years. These are the blue chip companies people love to buy, and they're still good stocks even being popular. Facebook and Netflix both had 20% dips due to less subscribers and visitors on each platform. Apple, Amazon, and Google has been going very strong without much of a hitch. From a valuation standpoint, Apple and Facebook are the high value companies, with Amazon and Netflix being low value but high growth, and Google is right in the middle. These are great companies for any technology lover, but they are mostly overvalued due to the strong bull market. All companies I would personally invest in. Let's move on to the 3 gaming companies. We have Electronic Arts, Take-Two Interactive, and Activision Blizzard. Being a gamer and a Blizzard fanboy, I have a bias towards Activision Blizzard. All 3 has performed very well in the past 5 years, 300% on average. Activision had good news of their new World of Warcraft expansion selling out like crazy. They also have Black Ops 4 coming this October. Take-Two is going strong, waiting on Red Dead Redemption 2 coming this October, and EA is not doing as well recently, on a 20% dip. This is due to analysts downgrading their stock and news of Battlefield 5 being delayed. All 3 are pretty overpriced right now due to the huge spikes, but interesting stocks for gamers. Then we have the most risky stocks on my list. Snapchat, Tesla, and AMD. Very popular technology stocks to trade in recent years. AMD is the best performer with a 200% spike from its $10 price just months ago. This is due to their new CEO making big changes to the company and all-around good news, gaining market share on Intel with their new chips. This is still a low-value company due to lack of profits. Snapchat has been dropping since their IPO. Their latest earnings didn't have the best user growth, causing more drops. An interesting company that I think won't be dying anytime soon, but can definitely drop even more in the future. And Tesla is a non-profitable company that really relies on those electric self-driving cars to be popular in the future. A very volatile stock that's perfect for swing trading. In the past year, they've bounced back from a dip over 5 times, meaning huge profits if you just bought at a dip. Elon Musk has been making some very strange moves recently on Twitter and smoking weed in an interview, but he has a lot of fans who think he will take them to the moon in terms of stock price. I would only risk 1% of my money in these risky stocks. There's 2 Chinese stocks, IQ and JD.com. Unfortunately, they're both on huge dips of 20% or more. This is mostly due to trade wars with China, so I think this is a temporary setback. All Chinese stocks are on huge dips right now, so keep an eye out for them. There is a lot of risk because we don't know where this trade war will end. Maybe China will be stuck with a lot more tariffs, causing their market to stay down for a few years. Both are not profitable but with good revenue compared to their American counterparts. I think JD is an undervalued company that could spike up hundreds of percents in the future. They have 4 times less price to sales ratio compared to Amazon, so 4 times cheaper comparing revenue. And IQ is more of a gamble, with low valuation but potential for Netflix gains. This really depends on how much profit IQ receives in the future. China might stay down for a while. All Chinese stocks are a great value to watch at the moment. Some other technology single stocks on my list. We have Nvidia, Adobe, PayPal, Microsoft, Shopify, and Micron, all stocks with nice growth over the past few years. Nvidia has been rising up very high. They've recently announced a new graphics card, causing it to rise even higher. A low-value company by the numbers, but not high risk just because they're very huge, with most of the market cap on graphics cards. Adobe is a fairly stable stock because of their subscription service for anyone who wants to use Photoshop. A nice swing trade stock since it always seemed to bounce back from the 50-day moving average. PayPal is a great company for the business-minded people. I think online businesses will only expand in the future and PayPal will be taking a cut of every transaction. They're still the king of moving money online and most likely will be in the future. Microsoft is a blue-chip stock. I bought this one on good earnings for a consistent uptrend. They won't be going anywhere in the next 10 years, so not a bad stock to hold. Shopify is another company taking advantage of online businesses, a huge growth stock with over 60% a year in growth. They were on a dip recently due to their recent earnings with less than 70% growth, causing investors to panic sell. But growth of 60% is amazing. Compare this to Amazon growth at 30%. Micron is a very undervalued stock from their numbers, but they're on a huge 30% dip due to possible memory prices falling. It seems like this stock rises and then dips every few years, depending on memory prices, which leads to profits going up or down. It's still one of the highest valued stocks in the market, so this is a very good dip to watch. All stocks I would trade on a monthly basis because I understand these companies well. Some non-technology stocks in Best Buy, Walmart, Visa, Disney, Constellation Brands, and FedEx. Best Buy and Walmart are 2 retail stores I use personally, and I see why they're staying alive in the age of Amazon. Walmart just spiked 10% on good earnings, with all numbers including online sales going up. They have great delivery and return policies, and I think they'll be competitive with Amazon in the future. Best Buy has been a consistent gainer in the past few years. People tend to like their in-store demos. Another store I still use to try new technology before buying. Visa is a fairly safe credit card company that makes money on every transaction with their cards. Credit cards aren't going away, so this is a blue-chip company to watch. Disney is another blue-chip stock that might spike up in the future due to their new streaming service coming in 2019. They haven't moved much in the past 3 years, so a huge spike could happen if their service is amazing. After buying Fox, they'll have so much content that even Netflix will be sweating. Constellation Brands is a beer company that invested heavily in marijuana. They invested over $5 billion in Canopy Growth, the biggest marijuana company, and I think this will pay off in the future. FedEx is a blue-chip delivery company. While Amazon ditching them is bad news, only 3% of their revenue is from Amazon. I think with online retail being more and more popular, this company is one that will continue to grow in the future. These are some non-technology stocks that I think will survive in the future. There you have every single stock on my watch list. I keep a close eye on these stocks while also looking at new ones on the news. A simple site I use for my watch list is Yahoo Finance, which shows the stock chart, as well as simple moving averages. The red line is the 50-day average, and the green is 200-day. A simple strategy is looking at each stock for a dip. If there's a pattern of it going up near one of these lines, I buy when it gets near it. For example, here's Adobe. It always bounces back when it hits this 50-day average line, so I buy when it does. They also have a portfolio section where you can enter your stocks and it'll show the percent gains and losses. Here's my FedEx stock as an example. I entered my cost basis of $250, how many shares I bought, and it shows the market value. It also shows the day's gains and total gains on the right. A very simple to use platform. Make sure to join my stock market group. It contains my real stock portfolio, which just reached over $300,000, some kept in cash. Every single buy or sell in the market is updated within 5 minutes on email to you guys. I also give updates daily on my current stock portfolio using Yahoo Finance. It's a very nice and simple experience. Here are some real winners in the past few months. Aurora Cannabis, sold for a 24% profit, or $3,700, and I just rebought this one for a 11% gain. Canopy Growth, I bought this before the spike and sold for a 25% profit, or $5,600, and Nvidia, sold for a 14% profit, or $490. Look in the description for a 50% off coupon. This group will be full price very soon, so get in now. Subscribe and hit that bell for more videos on my personal stocks. I make them every day to keep you informed, and leave a like if you found a new stock to watch. Keep watching to look at the best stocks, the Monk way.